Electric vehicle company NIO is now fighting to go and stay above the $21 stock range, which, by the way, is very close to its all-time highs. If you are a fan of NIO, you already know that the company delivered 3,965 vehicles in August of 2020, representing a whopping 104% year-over-year growth. But today, in a recent release, they revealed that September was an even better month, with all-time high deliveries numbers again and a year-over-year growth of 133%. And these crazy results have led to the estimates of the company being insanely high. According to CNN Business, the average price target for NIO from analysts had jumped up to $121 over the next 12 months, with low side estimates, low side of $44 and a high side estimate of $170. And the mean price target offers an incredible 458% increase over the current trading levels. So investors should be ecstatic that the Wall Street is now this bullish on NIO. And another bullish point comes from the Morgan Stanley analyst Adam Jonas, who issued a report which outlines why he believes that the industry leader Tesla will have zero sales in China by the year 2030. This can either be read as a negative for Tesla or a very positive for NIO and other China-based electric vehicle companies. But if indeed Tesla is out of the largest electric vehicle market in the world, this can only mean well for NIO. And it remains to be seen what Tesla would do with its Shanghai Gigafactory if it did indeed leave the country. But there certainly is no shortage of companies who would be willing to take it over, of course. And Wall Street is not the only one who is incredibly bullish on NIO right now. It may not have the intense following enjoyed by Tesla, but Deutsche Bank thinks the electric car manufacturer can quickly dominate the expanding Chinese market, of course. In a Tuesday note delving into whether the company could become the next iconic auto brand, analysts led by Edison Yu highlighted the NIO's growth in the competitive electrical vehicle market. And for one, as I said earlier, the sales are trending higher, and the team projected a record third and fourth quarter deliveries and raised its estimates for full year sales and earnings, which they might do again since they just keep outperforming themselves. And as adoption of battery-powered electrical vehicles increases and the word of mouth spreads, they believe that NIO can take material share in the premium segment as customers begin to understand the value proposition and quality of its products and services, Deutsche Bank said. And oh, by the way guys, my name is Sam and welcome to the channel. If you want to see more of this stuff, make sure to like the video and subscribe to my channel. I would highly appreciate it. But this lifted forecast from Deutsche Bank backs the firm's buy rating and $24 price target for NIO shares, a target that implies a 40% rally from NIO's current levels over the next 12 months. And obviously this is much more conservative than the polled Wall Street analysts, but guys, a 40% rally is still absolutely insane. Not to mention that I would never buy this if I didn't believe in NIO and wasn't prepared for the long term and to hold them for many years to come. Now, some investors were of course skeptical at the bank's bullish outlook earlier in the month and saying that NIO does not boast the same loyalty in China as the other luxury automakers. Now, there is some truth to such criticism given NIO is an upstart, the analyst said, but the bank continues to find compelling evidence that NIO is increasingly viewed as a player in the luxury auto space. And NIO's average customer referral rate jumped to 62% in the first half of 2020 from 52% of last year, according to the bank. And separately, a recent study by China's leading automotive web portal found that NIO had a higher referral rating in China than Tesla, BMW and Mercedes-Benz, despite being just 6 years old. So NIO standing in the Chinese market is already translating into more sales, and the automaker boosted its monthly production capacity to 5,000 in September. And so the NIO standing in the Chinese market is already translating into more sales, and the automaker boosted its monthly production capacity to 5,000 in September after selling out vehicles produced in August. And the third quarter deliveries are set to reach 11,500, the analyst said, which would land above the high end of the company's own guidance. And lastly, I believe that we might see a surge of those Nikola enthusiasts coming over to NIO because despite the high demand to EV stocks this year, there aren't too many different companies with actual revenues to invest in. We obviously have Tesla, but it is already quite highly valued, with a $400 billion market cap. And as investors got scared off from Nikola after all the allegations of lying about their technologies and capabilities, we might just see a trend of the market being more cautious when it comes to these companies and start gravitating towards companies with actual revenues and car deliveries. And NIO is a great example of such company. Now, as for my personal opinion on the NIO price targets, I doubt it will reach $100+ by the end of this year, which some hardcore enthusiasts believe, but by the end of 2021 and beyond, I would not be surprised if we saw those levels, especially if the company can keep up their trend of consistently outperforming themselves when it comes to deliveries and innovations in their car and battery technology. So that did it for today's video, guys. As I said earlier, if you liked this, crush that like button and subscribe for more updates on NIO and other EV stocks. So thank you so much for watching, and I will catch you in the next video.